Happy Sunday! Bitcoin bulls are on a break, it seems. Hello, Adrian, and welcome back. It's 7:30 p.m. UTC +8, and we are live once again for another episode of the Dang Oracle. Hope everybody is having an amazing Sunday and you're enjoying your weekend so far and that everything is going well. It's Sunday. Don't you have the same feeling when it's Sunday? You just wanna just do nothing and just lazy around. Well, it seems like the Bulls are doing pretty much the same. But let's see how things are first in the rest of the world with the COVID situation. Yes, Darren, there's no baby just yet, but it's hanging like a ripe fruit from the tree, ready to be dropping, right? But let's see how things are going first with our COVID. Let's go into the latest numbers. Where are my latest numbers? Dun, 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 dun. Where are they? That is doom, 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 doom. Here. Whoosh. Let's refresh and see how it is. So the US, we are at over 1.1 million. Over the 200k. Italy is starting to take over Spain pretty soon as the second most confirmed cases, country with the most confirmed cases. So that's not very good. Let's take a quick look at the chart itself and see if we are starting to see some flattening or not. We are at over 3.4 million cases. Luckily enough, the good thing is obviously the 1.1 million people that have recovered. So that's pretty positive. Still no flattening of the curve though. So it's still a positive slope up. Hi Vahe, hello, welcome to the this live episode. Well, the US seems to be starting to flatten. Spain as well. Yeah, Spain as well. It actually had a nice drop here. I don't know why, but yeah, it has a nice drop there. Apparently, a lot of people maybe recovered. And then Italy, yep, still going up. UK is actually probably the worst of all the countries in the top 6 right now. It seems like it just not flattening or showing any slowing of the curve. France is flattening, and Germany as well. Hi Millie. Do we have a dump tomorrow? Maybe. Most likely though. Probably. It doesn't look good, right? It doesn't look good. But before we get into any technical analysis, let's go first into some boring, but it's something that I usually do on a Sunday. So if this is not something that you enjoy or like, it's more going through data as an analysis on that end. So we got a monthly overview here from Glassnode. So this is the market compass that from Glassnode. They are a on-chain data company. So they basically check the statistics of what is going on the Bitcoin chain or the Bitcoin ledger. So as you can see, monthly they provide an overview of the Bitcoin development during the previous month. And they provide an assessment of the ecosystem's aggregate state by analyzing the behavior of the GNI or the Glassnode index and its subcomponents before combining this information with price trends and identifying the current regime, right? So first part, as you can see in the first part, we actually were in the green from the 1st to the 12th March. And then obviously after the 12th March, as you know, we got that major dump. Right, so here we can see some stats that they are checking at or are looking at. First section would be the network health. Then second section would be the sentiment, like how are people feeling, or you know, anything. And 3 would be the liquidity, right? So as you can see, the network health is actually quite good. That's the red line over here. It went up substantially, meaning also because of the hash rate, right? So even after this huge drop, we had a very low hash rate, and then it basically recovered pretty much almost perfectly back once again. Concerning the network growth, as you can see, the network growth is actually doing really well. We are getting more adoption, and we are getting better sentiment about the Bitcoin overall. Then 3 would be the liquidity, right? Liquidity obviously went down because mainly because of the dump, and then a lot of people pulled out or got liquidated, lost their Bitcoin. Okay, so let's see what the regions we are at. So currently neutral. Network health is strong, like I said. Liquidity normal, neutral, but strong in trading. A lot of people are actually trading. Transactions neutral, and investor sentiment and saving behavior is actually weak. That's where we are weak at right now at this current moment and time. So investors still feel fear, or still feel that there's some bearish things that could be potentially upcoming. So that's the reason why their investor sentiment is currently weak, and they are not feeling confident just yet to be investing into Bitcoin. So those are like sub indexes. So maybe go over. Okay, yeah. So as you can see here, actually we started off the year bearish, as you can see here, from the 1st to the 8th January. Then in February we transitioned into bullish. Then we stayed there for a while until March, and then after March we went back into bearish. So what happened? Yeah, that's not that interesting. Sentiment, I think, and sentiment is more interesting. As you can see here, sentiment was at an all-time low, and slowly but steadily we are recovering here. But as you can see here, even though the investor sentiment is going up, actually at the end of the month we dropped back down quite substantially as well. So hash rate is actually really good. As you can see, we dropped down a lot, but we recovered very substantially our hash rate. Liquidity, yeah, liquidity was not that great because we had that major dump, right? And then liquidity was very, very low, but the trading liquidity is super high. Yeah, so you can sign up for the Glassnode mailing list, and they will send you the report. So you can just go to glassnode.com and then sign up for their mailing list, and they will send you the mailing list, the report to your email. Okay, so we can see that the most important thing is this trading liquidity. So during the times that actually things went bad and things recovered, trading liquidity was actually super high. So that means that traders were actually very, very active. Yeah, I mean, it seems quite logical, right? 10K, baby. maybe but 10K would be very bullish, at least for me. I would be very bullish if we manage to break that 10K. I think if we break like 10.5K, 11.5K seems to be very, very, very normal. Like, you know, I wouldn't even doubt that we would hit immediately in a very short term towards 11.5. Actually, 10K is not that important, to be honest. 11.5K is where the real resistance is from because we got rejected there 2 years in a row on 11,500. So that one is Yes, Cedric. So I assume that you still don't have enough Bitcoin. That's why you want it to be going down. It most likely will be going down first, though. So we'll be getting there in a while. Let's go over this a little bit further on. So at the end, what basically the conclusion is, it's hard to say whether this is due to a general loss of faith in Bitcoin or the need to liquidate current holdings for liquidity purposes, the reason why liquidity was so low, in combination with negative exchange net flows. However, this might be a good sign for Bitcoin ecosystems, suggesting coins are not piling up but still being in high demand. So that basically just means that liquidity went down, but there's still quite a substantial amount of people very, very much interested in Bitcoin and interest in trading Bitcoin, meaning that it still has a very positive effect in the long term, or on the macro perspective, or on the on-chain analysis. Let's put it like that. Hi, Henry. Welcome. Someone is recruiting mafia to pump and dump. Yeah, maybe I should do a show with a tinfoil hat on top of my head as well. All these conspiracy theories. Yes, Bitcoin is made by NASA. That was yesterday. Now we have mafia people who are pump and dumping. Actually, to be honest, it would be more likely that Monero is being pump and dumped by the mafia, because there's actually quite a lot of rumors that Monero has some links with mafia, because they're using that to be paying or moving or launder their money. I mean, those are the rumors, right? I don't know if it's true, yes or not, but it seems that there's a lot of activity in Italy apparently for Monero. So I don't know, maybe. Henry, what do you say? What do you mean the market is crazy this weekend? The market is so slow. Like I don't know why you think it's very, very crazy. It's very, very slow. Okay, so yeah, this Glassnode, if you're interested in this kind of stuff, please do sign up for their mailing list. Go to their website; it's free anyways, so why not? Okay, there you have it. There you have it. It's used by the cartel. Maybe we should talk to the Mexican cartel as well, and then form some other some other crypto. Anyways, let's go on to economics, right? Economics first. This is actually a really, really interesting article. You definitely should check it out. It's on Medium, and it's written by this guy, CJ Do. Yeah. I don't know who exactly it is, but he's actually an economist, and he's been giving his perspective over what is possible and what is most likely going to happen to the economy. Hi, If Taker, thank you for following and welcome to the channel. So yeah, this is actually the roadmap that he has written, and the first stage is deflation, right? And that is currently what is happening right now. As you can see with oil, prices went down. Market, the farm industry, the car industry, everything looks to be crashing right now, and prices are going down. That's what we call deflationary, right? And what is the response from the government? Of course, quantitative easing and rate cuts. And as you know, they are thinking about, actually, does everybody know if they cut the rates into negative? I don't think so, right? They didn't do it, right? Did they? Let me take a quick look. CME FED. If they, I'm curious if they cut it into negative or not. Most likely not. Let's see. In 38 days, we have a new countdown. Quantitative ease. Current. 98%, 25. Oh, actually no, no, no. They didn't cut it into negative. Okay. So yeah, but basically it's zero right now. So here you can see the first stage: quantitative easing, rate cuts, bailouts, corporate bailouts, and bankruptcies. Yeah, that one we all know, right? They are currently buying every fucking assets that they can, billions and billions on a daily basis. Consumer debt defaults, what's that? It means like people who are not able to pay their credit, they will be just saying like, okay, you don't have to pay your credit, you don't have to pay your bill. Most of the easing goes to, like, for example, student loans. They are saying like, okay, you don't have to pay your student loans for a while. Or you can pay it on a later stage. Thank you for liking the stream, Cedric. And then the next stage would be real estate crisis. Well, why real estate crisis is because, well, a lot of people will be just there will be no demand for any real estate, and then people will be obviously having too much supply, and then we have a real estate bubble because the price won't be going up anymore, and rather it will be going down. And then at one point, people won't be, because they won't be able to pay their rent, for example. Then yeah, that market is going to be crashing as well, because most of the people who have bought a house, they've also took a loan for it, a mortgage for, like, for example, 20 to 30 years. But if they're not able to rent it out, or people who are renting it but they cannot afford to pay the rent on a monthly basis, then they cannot pay the bank to pay for that mortgage, and then of course you have this whole issue, right? And then at one point we get a real estate crisis. Actually, it happened also I think 10 years ago, where we had a real estate bubble as well, right? So what will be the market reaction? The market reaction will be to rush to safety or liquidity, and that will be US dollar and bonds. Well, US dollar, not only in US dollar, but all the strong currencies basically, right? Like everything that is a strong currency, the yuan, the euro, you know, those kind of things. And then what will be the stage two? Stage two will be hyperinflation, because after everything is so low on price, people will be interested and wanting to buy it again, right? People who have a lot of liquidity, a lot of cash on hand, they will be buying it again. Yeah, that's actually in the second part. We'll get there. So what happened then, because of the currency devaluation and loss of purchasing power, then we will have the opposite of quantitative easing, and they will actually go and raise the rates, and government and corporate debts defaults, because not the consumer will be defaulting their debts, but then the governments and the corporates will be debts, and then the bond market will collapse. And what will be the market reaction? And that's where I am interested in, because then the people will be rushing to external safe havens, and that is of course precious metals, gold, silver, and hopefully cryptocurrency as well, right? Because that is considered as a safe haven as well. I mean, that's what this whole story is about, right? We believe that crypto could be a safe haven, right? It's an upgraded version of gold. That's basically what we are all thinking or banking on, right? Then what happens in stage three? Well, stage three is a Bretton Woods style systemic reset. People will be the governments will see that there is a huge problem, right? The currency crisis and everything, right? So they will be negotiating amongst each other. The world economies will be negotiating, and then what can happen is, for example, a new global reserve currency. So central banks build out through, like, the top 5 of the largest fiat currencies. Like, you know, they take the top 5 and then they will peg any currency towards that top 5 currency. A global reserve settlement system, and the IMF becomes a lender of last resort to central banks. Transition of the US Reserve, a move to multipolar geopolitical power base, SDR currency weighing government by central banks via a privately controlled distributed ledger. or a blockchain. So those are the potential outcomes that of a new currency that he is, that he's giving. But of course, all of this is just what he thinks or possibilities that he's thinking, right? And then he's saying that government debts could be forgiven or reset. And consumer debts may be forgiven, such as student loans and credit cards. And then a universal basic income. That is something where everybody basically will get a fixed amount of salary or money, and that only by if you are doing something like work or you're doing something positive, you will get more than your basic salary. And then expedite to the fourth industrial revolution, meaning technology will become something that is going to be the most dominant force into the global economy, right? You can see here 3D printing, distributed renewable energy, increase economic efficiencies with integration of blockchain, embrace automation and new forms of distributed decision making. And E would be a possible as well a return to a gold standard. But yeah, that's he says that this is less likely because central banks will still want to maintain control over the monetary policy and currency issuance, and gold will be retained as bank reserves but will not back fiat issuance. So those are a little bit, and he also gives you some potential risk and alternative objectives. You can read it on this article on this Medium. I think it was it's a very, 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 very interesting how he's looking at the potential breakdown of our economy and how we are going to be evolving in the future to a different type of currency or money. And I think he has a point there. I don't think that it's going to be that quickly or anything like that. I do think that we still have to go through this deflationary phase for most likely quite some time before people will give up. So I still think that, we will go through this, then, print more money and try to, ignite this economy a couple more times before we get to that inflation phase. But that inflation phase is obviously most likely going to happen because of what we're doing right now, right? Yes, Henry. I can share. I think I can share it. But if you just type in at medium.com/@cjdo, you will find the article, right? So basically, what I'm thinking is the following. Cedric, USDT is printing as well. I mean that's normal, right? Because when the government are printing fiat or the US dollars, some of that US dollars will go into the cryptocurrency market, right? So of course USDT is going to be printing as well. So from that 7.2 trillion, for example, even if it's only like 1% of that, that's still $72 million, right? Just 1% of that, $72 million that goes into the crypto market, that immediately, does pump the crypto market up, right? So, and that's just what I'm thinking, like 1%, but it's obviously it's most likely a little bit more than 1%. But the more money that they are printing and injecting, of course, the more money that will also flow somewhere into the cryptocurrency market, because the money is distributed, everywhere, right? But what I'm trying to say is, like, the economy is like a balloon, right? You can overinflate it and then it will burst. But you can also not do anything and then it will just be compressed and it will be empty and dead as well. So there's not really a right or a wrong way. And the problem is right now they are going for the inflation way, right? So they are pumping everything and pumping this balloon, and at one point it will burst. That's just how how it is, right? It's not maintainable, but it will still take a while, I feel, before we get to that point, and I still think that we will go through some more deflationary actions first, and definitely in some very interesting markets, and that will also give us possibilities, right? Possibilities and opportunities to pick up some cheap commodities, some cheap assets, and yeah, if that happens, most likely, as long as Bitcoin is so correlated to the stock market, most likely Bitcoin is going to go down as well. If the stock market starts crashing, then I don't see right now at this moment in time Bitcoin not crashing as well, until Bitcoin becomes an official hedge, right? If it becomes an official hedge on the economy, on the market, then then things will change. But right now it's not, right? We can clearly see the correlation between the stock market and Bitcoin very, very, very clearly on every chart. So yeah, if Bitcoin goes down, I mean, if the stock market goes down, for now I'm just trading Bitcoin, or comparing Bitcoin very similar to like an altcoin of the stock market, because that's how you have to look at things, right? While Bitcoin, you have Bitcoin and all these other shitcoins or altcoins. What Bitcoin does, all the altcoins, aside from a couple, they always follow Bitcoin, correct? Well, I just look at Bitcoin as like an altcoin from the stock market. The stock market is obviously trillions and trillions of dollars in market cap and leading the price. So if the stock market is going up, then our little precious little Bitcoin is most likely going up as well, because it's just following the main coin, which is the stock market. So that's basically how I look at things. And a lot of people hate that. they of course they are so in love with their Bitcoin. What are you saying? Bitcoin is an altcoin of the stock market. They can't see that perspective, but it's how it is. I mean, until we see some decoupling of Bitcoin with the stock market, then yeah, then I will change my my perception. But until then, that's how it is. Okay, let's now go back into what we are here for, some Bitcoin trading. So let's follow up on what happened yesterday, right? So yesterday I gave you this this basically. I told you guys I do see Bitcoin going up for a little leg up, one more into my green box, and ta-da! We happen to hit, as you can see, pretty much the green box right here today at what was it, 9,200, I think. And I told you guys that is where I see probabilities, and I see opportunity, because like I have also said, if you look at the analysis from yesterday and you look at the weekly close of the traditional markets most likely will be going down next week. That is what we are looking at. So if I think that the stock market is going to go down, then obviously I do believe that Bitcoin is going to be taking a leg back down as well. Hi Lur, thank you for following and welcome to the channel as well. So as I told you guys, if you look at the S&P, the daily close was very, very bearish. We closed actually below the EMA 55, meaning that I do see that at least over the next week, a minimum pullback to the EMA 21, or the yellow line here at 2788. So if that happens, then Bitcoin is obviously going to take a leg back down as well. So that's why I have made this chart here. And if the S&P pulls back to that area, I do see that Bitcoin most likely will be taking a leg back down to my 8.5k area as well. So I do expect here to like 8.5k. If the S&P takes another leg down, then I do think that Bitcoin will do the same, and eventually I do actually believe that Bitcoin is going to be pulling back to around this area, but this is actually a buy area for me, not a sell area or anything like that. Around this EMA 200, or the simple moving average, around this zone here, which is currently at around 8k level, or just a little bit below 8k. Obviously that will change depending on what the price does, because it's a moving average, right? But I do believe that eventually Bitcoin is going to be taking a leg back, most likely over the next week, back to around that area. it's possible that we already will stop retracing at around this area here at like the 8.5k. I do believe we will have a small bounce on the 8.5k area actually, but I think we have a larger pullback because of because I do think that the S&P or the stock market is going to have a bigger retracement than just to that EMA 21, because if you look at it properly, this is like a rising wedge, and you know, usually it will take a little bit more than just that leg. So if we take a measured move, we can have some expectations. And if we take a measured move from here and we break down here, we can see that we most likely will be going towards like 265, something like that, 265 on the S&P. So if that goes to that blue line here, I do expect that Bitcoin is going to do very similar and going down towards this area as well, to around that 8k level. But I do believe that 8k level definitely for now is going to still be holding, because the monthly close was actually quite good. And yeah, like I said, we have the halving that is coming up. People are still quite bullish and are thinking we are going to the moon, we're going to get rich with the halving. But I do think that a lot of people will be disappointed with the action, because most of the times during the halving period, nothing much happens, or very little things actually do happen. So yeah, that's what I'm thinking. We will get, most likely we'll be getting a nice pullback over the next week on Bitcoin as well. So for people who are still interested in buying some Bitcoin, yeah, you can buy at around the 8k level. I think that would be a nice entering position. Are we going to be pulling back a little bit more? Maybe, but we will have to be analyzing things after that, right? So Henry, do you remember what I told you yesterday, where we would be ending in euro? Let's see on the euro chart. Yeah, I told you that we would most likely be going to around 8,000. Yeah, I told you, right? I told you we would be going to around 8,400 euros or something like that. Remember? And as you can see, we did touch it nicely right there around the 8.4k euro. So back to my US dollar. So most of the times I will be so before people are saying, wow, this is amazing, you were exactly perfectly right for the last, I don't know, I've actually been correct for the last couple of days now, right? Because I predicted the top, which is like close to like 9.5k. Then I predicted this 8.5k, and then now this 9.2k. So trust me, I will be wrong many times as well. So don't think that that I have this crystal ball that I can see everything what is going on. I just try to see what the highest probabilities are for in my viewpoints, based on what I'm seeing in the charts, right? But at the end of the day, please don't follow me in please don't follow me, and this is not financial advice. I'm not a financial advisor, so whatever you do with your money, please know that you should be doing it, you know, for yourself and not for anybody else. David, what do you mean with you are always thinking correct? So why do I think that we are going to take a pullback? Well, first, the main reason is of course the S&P chart. That daily close and that weekly close was not very good. So that is one reason why I do think that starting when the traditional markets and the CME trading chart opens tomorrow, then most likely we will get that pullback, right? And then secondly, I've told you guys that things are starting to look a little bit tired, right? We can see here the Stokes are starting, although we are still curling up here, the Stokes are actually going towards the downside. We can see also the CCI has crossed below the EMA 21. So, you know, that is starting to show a little bit of weakness, let's put it like that, or at least some momentum that is going down. Also, we can see, no, that's not one here, this one. We can see here the SMI. I told you guys, if we see that there is like some green flashing background, it means that, you know, momentum is starting to reach their peaks, and this indicator has been correct pretty much. You know, for many cases, right? Not always, but for many cases it has been correct. So that's one of the reasons why I'm saying, like, okay, we reached that top most likely, and we are going to make a small pullback. I'm not bearish at all, but I'm just saying most likely a small pullback towards that first 8,550-ish area, and then most likely a pullback a little bit deeper down as well. One of the reasons why also I'm saying that we are at that pullback level is because we basically hit our top of our triangle here, right? And most of the times whenever we are trying to break something, it takes a couple of times before we break it, right? So this would be the most bullish scenario. So the most bullish scenario is we pull back and we go sideways around this zone here, something like this, and then we break up here, right? And then actually if we break through this zone and we hold this level here of the 7.8k or something like that, if we hold this zone for, let's say, this month, and we break above out of this triangle, I really don't see anything stopping Bitcoin. And I'm looking at 14,000 or something like that by, you know, in the next couple of months or something like that. I don't think anything is going to be stopping Bitcoin. And once we reach to like 14,000 or something like that, then, you know, all the bulls will come out and they will be saying like, we are going to the moon, but most likely they will be right. You know, if we are starting to see those kind of amounts for Bitcoin, a lot of retail investors will be coming back in, and, you know, it will have a lot of very interested people into the market once again. But we are definitely not there just yet, right? Do I think that that is the highest probability? Well, for me, just still not the highest probability. I still believe that we will get rejected from once again from this one, and I do believe that we will get somewhere, you know, more likely somewhere around this this price zone. I think that is more realistic, around this weekly 200 EMA or 200 simple moving average, so which is currently at around 5,700 to 5,900. So let's cut it in the middle, something like $5,800, something like that. I think we will eventually pull back to around that area, but I'm not the one who decides this. The market does what the market wants to do, and right now we cannot say that this is looking bearish, right? We have a lot of bullish things ongoing right now, actually. So we can't say that things are looking bearish, but things can also change very quickly. Anyways, something that is very interesting is on what we can see on the 12-hour chart as well. I want to show you that on the 12-hour chart we are potentially confirming a bullish cross as well. So the EMA 55 over the EMA 200, and which you can see right here, right? So this bullish cross, if we back test that, whenever we had that bullish cross, things were actually really good, right? So let's go back. So when we had a bearish cross, let's see where we had the bearish cross. So when we had the bearish cross here, the green over, well, maybe I'll just remove the other ones, then you can see it more clearly, right? Makes sense. So we just leave these two, then you can see it a lot clearer. So as you can see here, bullish cross, bearish cross, green line crossing down. Hi Andrew, thank you for following and welcome to the channel. So the green line crossed down here, and as you can see, price went from here all the way down to very low. Okay, so let's go back one more time. Here we had a bullish cross here. So this is very similar to what the situation is right now. We are having a bullish cross, and what happened then from this price here, we went all the way up to here. So that was a push from let's say 8,500 to 10,500. So that's a $2,000 move. That's not too bad, right? Then let's back test a little bit more into the past, see if we have more crosses, bullish or bearish. We didn't cross here. Here we had a bearish cross here, the green crossing down, and then price went down. How much? Ooh, that's a substantial drop as well, from 10,000 to pretty much 7,000, so a $3,000 drop. Let's see if we have more crosses in the past. It seems that, yeah. Then the next one would be this one, from yeah, when we started our super bull run, basically. From $4,000 all the way up to yeah, to the moon, right? To the moon. 13,500. So that's like a nice little $7,000, $8,000 move. If we have that again, then yeah, like I said. Anyways, as you can see, these every time we had this cross on the 12-hour chart, something really major actually happened, right? So this cross could mean that we are possibly entering a major bull market. So maybe, right? But the thing is, we've seen that with the 4-hour chart, sorry, the 2-day cross before already, right? Where it crossed over and then it crossed back down. Let me show it here on the 2-day chart. Where is it? Here. So on the 2-day chart, we've been speaking about that for a while as well. Boom. Let's remove all of this for a while. Okay, you can see here we have a bearish cross, and okay, price actually went down, obviously, but not that much. And now we are trending immediately after a very short period back up. So it is basically a fake out of that zone. Or it can also, what happens is this can go up and get rejected as well, right? So we'll see. Nothing is really confirmed just yet. I'm just showing that there is a bullish cross, multiple bullish crosses starting to be forming. So we cannot deny that, right? We can't just like stay bearish forever. Hi Alvin, thank you for following and welcome to the channel. But that's not obviously not going to be immediately for today, right? So what we're thinking is, for now, I think next week is going to be very interesting. How hard do we pull down or retrace and take it from there? But like I said, if things, you know, if things if I see closes, and definitely if this monthly closes above 9,000, our previous high 9,350 or something like that, then I'm actually going to be very bullish. And I don't see us, why not going back to like 14k or something like that. Well, first step will be 11.5. Like I said, 11.5k is something where we got rejected from for 2 years or something like that. So step by step, right? Step by step. But yeah, 11.5k is what? Here you can see it very clearly here, 11.5k rejection. That was very painful. And you can see here as well, key point 11.5, 11.5. So that is from 2018. That's from 2019. So major resistance, right? Major resistance line. But if we break 11.5k and we close a weekly candle above 11.5k, I'm going all in. I have to take all the bitcoins in the world. That's what I'm thinking. If we ever close a weekly candle above, because then really we will be, then it would be really a moon. But until then, sadly enough, I have to say, until then, this is what we are still having, and that is a high, a lower high, a lower high, a lower high. And even though we pumped close to $2,000, we still have a lower high. So we are still on a weekly downtrend. So that's something that you know, all the bulls should be thinking about as well. But this is definitely another chance, you know, to be breaking that. You know, the trends are there to be broken, right? So yeah, maybe we'll finally break through that that horrible resistance line in the next coming months. But yeah, we are near there, right? We are very near there. So let's take a quick look at the halving, right? So the previous halving was on the 9th of July 2016. So let's just go to 2016, the 9th of July 2016, and see, you know, see what happened there. 2016, 9th of July, right? Oh, I pressed the wrong button there. 9th of July 2016. Okay, go. So what happened on the 9th of July 2016? Let's see. Where's the price? There's the price. So the 9th of July, let's put a nice vertical line so we see where we're talking at here. So that was the halving. This was the halving date, right? So what we can see is about 2 weeks, yeah, about 2 weeks before, we hit our local top, and then we had the halving. And as you can see, during the halving, I know a lot of people think that we are going to moon and Bitcoin is going to make me rich, but during the halving, nothing much happened, and actually we crashed back down here. So let's take a quick price range. So let's say we had the halving price. Let's go from the top, right? So we had this top here. Let's take a top, and then we hit the bottom. So we dropped around 40% after halving. So we created a local top, and then after having minus 40.76%. So, you know, but then obviously what happened afterwards is we went to the moon, right? I mean, look at this, halving, very bullish. But like I said, we also have to keep in mind bullish accumulation, bearish accumulation right now for our third halving. So, you know, macro perspective has to be different, or possibly will be different, right? So we keep that in mind. But let's do a quick look. If, for example, if we go down 40%, what our price would be from our top, right? So just for out of curiosity, this is our top at 9.5k. Let's go down 40%. It was like 40 point something, right? 40.83, I think. Yeah. Then would we be hitting around 5.6k? 5.6k. 5.6k. Does that not sound a little bit familiar? Didn't it sound a little bit familiar? Maybe. Well, what did I tell you guys? between this weekly EMA and 200 MA, 5.6K would be this area. So could it be? Just saying, it's a probability, right? It's interesting. I mean, at least for me, I think it's very interesting. In euro price, that would be, let's see on the euro chart what the EMA 200 would be on euro chart. On the euro chart, it would be around between 4,900 to 5,000 euro. Yeah, 4,900 to 5,000 euro. Let's say 5,000 euro. That's a nice round number, right? So, interestingly enough, our EMA and our MA is around that 5,600 region. So that could be, that could be something that that could possibly be very, very interesting, right? 1 second, let me go take back my chart, or else everything is going to be a mess. So, boom, boom. Let me delete this for now. So, very, very interesting is, yeah, if we take 40% off, we get to that zone. Do we get a pullback all the way there? Maybe, right? Would it surprise me? No, it wouldn't surprise me, because that's a very, very, very possible target as well. Well, why do I think that's a possible target? Well, look at this. If we take a Fibonacci retracement from the bottom point to that point, golden pocket ratio is, what do you know, around that area. So if we do a golden pocket retracement from our move upwards, we get to that area once again. So many confluent things, so many confluent things. That's what I'm seeing. So, yeah, it's definitely an area that we have to be looking at and putting in consideration, right? But like I said, I'm a day trader, so although I like to do all of that macro stuff and all these probabilities, that's basically what I'm doing the whole day, aside from reading reports and looking at data. I do try to see all the, take a look at all possible major probabilities, confluences, backtest a lot, seeing what crosses, what kind of influence, all of that stuff. That's basically what I'm doing on a daily basis. But for me, this is quite logical that we will be having a little bit of a pullback over the next week, because things are starting to look a little bit tired. And although we are very, very near, it's only, I think, 8 or 9 days left, right? 8 or 9 days left before the halving. I don't think we will see like a massive move during the halving date. I know everybody's like looking at that countdown meter and everybody is very excited, but I don't think we will have something super major, right? But yeah, I do think that most likely we will be pulling back around this area here first, around the 7.9K level ish, something like that. And then we will have to reanalyze. Most likely we will have a serious bounce from that area though, because like I said, that was some major resistance, and major resistance that was broken. And then also when you drop down, it also means that it's not going to just be breaking down as well, just for no reason, right? So let me take a quick look at the volume profile around that area, because that's what interests me as well. On that area at the 7.8K level, just I'm curious about that one. I have so many indicators on that it lags a little bit. So sorry about the wait. Okay, here. Oh, wow. Take a look at that. So I just wanted to point out the area that we are interested in, right? Oh, 1 second. Yeah. Oh, fuck. 1 second. Let's move in a little bit. So we have a giant node here, and then a giant node here. So yeah. So you can see here, what if we break this zone here, which is the 8.5K line, right? So the biggest support, or the biggest support line is here at 8.5, which is where I do think that we will have a bounce. It won't, most likely won't break immediately, but then as you can see here, there's a gap, right? There's a gap in the volume profile, and then we immediately go to 7.8 to 7.9K. So yeah, it's the volume profile is actually even telling me that I'm that my zone of my green box is perfectly correct, right? So yeah, I'll make a little box here because this is what I'm thinking, right? So that is the 8.5K line. So I do think that we will have a bounce here. So what it can do is something like this, right? So it goes down, we pull back, and we bounce, and we bounce a couple of times here, and it takes a little bit longer, and then we'll break down to that 8K line. The reason why is because that support line is so strong, or that resistance line before was so strong. So it could maybe take a little longer here, sideways here around that 8.5K area. But I do believe that we will be retracing back to around this 7.8 or 7.9K area, and then once again make a serious bounce upwards. So that will be my my plan. But for now, of course, like I said, I've told you guys, this is my green box. I told you yesterday. I think I told you Friday. No, yeah, it was Friday. I told you Friday. I think we're gonna have a leg up higher, but I don't think we will get a higher high because things are starting to look tired. I said most likely it will go to this green box here between around the 9.2K range, and we actually hit exactly 9.2K. But yeah, it has been quite strange, right? So to be sometimes it's like very weird to look back at things, what you've said, and then when it actually comes through, it's always like a little bit weird, right? But like I said, don't think that I'll be correct all the time or anything like that. I'll be wrong plenty of times, but that's the whole purpose of trading, right? The whole purpose of trading is to be more times more correct than to be wrong, and then in the long run you'll be making money, right? The same example that I always tell is, if you are correct 4 times in a week and you've made $100 every time, and you were wrong 3 times, and you lost $100 each time, at the end of the week you are still up $100. And that's basically how you have to approach trading, because if somebody tells you that they are correct all the time, they are just plainly lying. And you should not believe that person. But anyways, to end off the show, there was one more thing that I wanted to say. Oh yeah, of course, there's one more thing I wanted to say. So yeah, if you look at if you've watched my old video, the Great Depression part 2, yeah, just watch that video. I go into more details, but it's basically about the Dow Jones, a comparison of the Dow Jones with the Big Depression in 1929. Woo, a long time ago. 1929, and what is happening to the Dow Jones right now. And we can see on both charts, if this Dow Jones is loading. Why is it not loading? Let's see. Doesn't want to load apparently. Oh, what do you know? It's 8,900. We already have a $300 spread on the short. That's not too bad. uh, where is it? Boom boom. Yeah, so now it is messed up. Okay, let's go back. Dow Jones Industrial. Let's change this into a split screen, and this is the weekly, and this is also the weekly. So this is now, and this I'll take back and go to the year of 1929. Wow, that's a long time ago. So this is 1929. Yes, as you can see here, we are forming almost exactly the same structure. Sorry. So, and then what happened is we made a FIB retracement from this point here to this point here in 1929. Let's make it correctly. Poof. And you can clearly see that we perfectly made a retracement back into the golden pocket ratio, right? You can see here. Back into the golden pocket Fibonacci retracement lever. Hi Albert, thank you for following and welcome to the channel. And what do we have now in currently in our situation is, let's do a Fibonacci retracement from here all the way down here. And what do you see? What do you see? What do you see? Boom. Golden pocket retracement level as well. And this is not a positive candle. Shooting star candle, reversal pattern. Go and check it. Check. Where is it? Shooting star, here. Bearish candle, shooting star. It's not a gravestone. Is it the gravestone? Is it a gravestone or a shooting star? Let me check again. It's a shooting star. It's not as bad. If it was a gravestone, it would be even worse. But anyways, the similarities are, look at the similarities. Look at the similarities, right? What is this candle? What is this candle? Shooting star. What is this candle? Shooting star. Same. Look at this. Uptrend. Uptrend. And then reversal. And then what happened in 1930? Yes, 80% down. That's why it's called the Great Depression. Can you imagine if the stock market went 80% down? If the stock market goes 80% down and Bitcoin is correlated to the stock market, we're going to like $1,750 or something like that. So for all the bears, they'll be salivating. Wow, $1,750 Bitcoin. Wow. So yeah, things might turn out pretty bad. But like I said, a lot of differences in the economy itself. Back in that time, the government did absolutely almost nothing. There was no such thing as quantitative easing. There was no such thing as, of course, a lot of technological advances and this and that. So, do I think that this scenario is going to be replicating once again? Most likely not. Let's be a little bit realistic. But is it possible that we are going to make at least a very, very big dump over the next couple of months because the situation is not improving, because we are still in a lockdown, or we get a second lockdown after, we get a second, let's say things reopen and we get a second major wave and the hospitals can't handle it and so on, and we still don't have a cure or something like that. Not now, but in, let's say in summertime or in September, October, and we get a second wave. Most likely the stock market is going to be reacting upon that as well, and we will get another pullback down, right? So keep that in mind. Very similar situation as the Great Depression in 1929. I know it's very far-fetched, but you cannot deny how the similarities, right? How it's looking like. So yeah, just keeping that in mind. just keeping that in mind. So I think I will close down. That will be my ending for today's show. And tomorrow, oh my God, tomorrow, what do we have tomorrow? Tomorrow we have so many good things. We have the weekly candle close, of course, for Bitcoin. What are we looking at? Maybe we should take a look at that first, right? Before we end. So this is the weekly candle. Can't be bearish on that weekly candle. Like above all major moving averages. Yeah, looks really good. So if tomorrow morning, for me tomorrow morning, if tomorrow weekly candle closes like this, I would be still very bullish, even though if we are pulling back, right? I would still be very bullish. Where would I be less bullish is if we would be closing below this red line here, below the 8.5k. If we are closing below the 8.5k, I think a lot of doubt and insecurities will be coming in, right? So that would be my two areas that I'll be looking at. Where will we closing this weekly candle here? If we have a more and more a higher, like a longer wick here on the top side, more pressure going down, that will be a bad sign. So if we have a long wick all the way here to the half of that candle, that would be pretty bearish for me. So yeah, that's what we will be looking at. Tomorrow morning, CME is going to be, we have pre-market, right? CME pre-market. So that'd be very interesting to see what CME is going to be doing, because on the weekly, this was the daily, a lot of indecisions, a lot of doji candles, but something very interesting on the CME chart is the RSI. Let's go to the RSI. I wanted to show you guys the RSI a little bit here. So this is what the RSI is showing right now. If we make a pattern, we can do something like this. So what does this look like? Well, this look like a falling wedge, right? And usually what happens with a falling wedge, you've guessed it, a falling wedge usually breaks to the upside. So if this RSI is going to be breaking outside of this falling wedge, I would be very bullish as well in Bitcoin, right? So that is actually the catalyst for me to be thinking like, okay, we'll be going to towards the 11.5k in the very near future, because if this breaks out, we'll probably be heading that direction. Of course, it's called resistance for a reason. If we go back here and this happens, then we will be seeing a pullback. That's basically right. We will have to wait another turn. That's basically it. But those are the two things that I'll be looking at. RSI on the CME chart. Are we going to break outside of this wedge? Yes or no? Do we close the weekly candle? Do we close around this area here? Anything above 8,800 is pretty bullish, right? But if we close below 8.5k, a lot of doubt once again. That would be something that would be, more to the bearish side. But other than that, yeah, I think I've defined everything pretty properly. I do think that we're gonna have a pullback around to the 8.5k over the next week, and then we'll be reassessing everything from there. But tomorrow morning, have to wake up early once again and see what the CME has what surprises CME and the stock market will have for us. Definitely very interested in the stock market tomorrow, and when the New York Stock Exchange is going to be opening, because oh my God, this weekly candle, look at this weekly candle. That's not a good weekly candle, is it? What is it again? Yes, it's a shooting star. We've been saying it. It's a shooting star. So yeah, that weekly candle is not that great. So I do believe over the next week we will have a pull down on the stock market, which means most likely Bitcoin is going to be following as well. Well, that's basically what my my thinking or mindset is at this moment and time. For now, I don't think that I don't think that we are going to be pulling back today or something like that. It's most likely going to be happening tomorrow when the CME market is going to be opening. But yeah, I think we're gonna have a retracement. I'm aiming mainly on this area first, the EMA 200 or the moving 200. Simple moving average 200 on the daily, and I do believe that we will be having a very strong bounce from there. So I'll be thinking about entering a long position from there. Right now, of course, shorting from my green box here. Like I said, I've explained that already since Friday. Was very patiently during the weekend waiting for that position to be filled, and it finally filled. I think a couple of only today, right? It was on Sunday or something. Yeah, it was today that it got filled finally. And then let's see what tomorrow brings. Hope you've enjoyed it. I will hopefully also see you guys all tomorrow, 7:30 p.m. UTC +8. If my wife doesn't force me to go to the hospital, then I'll be here once again. And yeah, please do share if you like this type of content. Please do share. Do share this video, YouTube or Facebook. That would be very helpful. And until tomorrow, please stay home, stay safe, and of course, stay COVID free.